Something massive is happening in the silver market right now, and most people, even the ones who own silver, have absolutely no idea. And by the time they figure it out, it might already be too late to do anything about it. If you are interested in money, finance, or changing your financial future, like this video and subscribe right now, because what you're about to learn can change the way you see money forever. Let me start with a simple question. Have you ever heard of COMEX? If you haven't, don't worry. Most people haven't. But here is the uncomfortable truth. COMEX controls more of your financial future than your boss does, more than your bank does, and definitely more than any politician ever will. And right now, COMEX is sending out a warning signal so loud that the smartest money managers in the world are sitting up and paying very close attention. The question is, are you? Let's go back to basics for a second, because before we get into what's happening, you need to understand the stage. Think of COMEX like the world's biggest silver and gold marketplace, a giant trading floor where banks, hedge funds, mining companies, and big investors all come together to buy and sell precious metals. Not the actual metal sitting in your hand, but contracts that represent the metal. It's kind of like buying a ticket to a concert that promises you a seat, but the concert might have more tickets printed than actual seats available. That's the world of COMEX. And that detail right there, that's going to matter a lot in a few minutes. Now imagine you are a middle-class family in, let's say, 2021. Prices on everything are rising. Your grocery bill is up, your electricity bill is up, your rent is up, you're working hard, you're earning a salary, but somehow you're falling further and further behind. You start watching YouTube videos, reading articles, and someone tells you, hey, silver is a hedge against inflation. It protects your money when the dollar loses value. So you buy some silver. Maybe a few coins, maybe some silver ETF shares through your brokerage app. You feel good, you feel safe, and then you go back to your normal life. But what you didn't know, what almost nobody tells you, is that the silver market has a secret, a dangerous one. And that secret is exactly what's being exposed right now on COMEX. I'll get to that secret in just a moment, but first you need to understand one more thing about how this whole system is built. The way COMEX works is this. For every ounce of real physical silver sitting in their vaults, there are somewhere between 200 to 400 paper contracts traded. Read that again. 200 to 400 paper promises, backed by one actual ounce of silver. Now think about what that means. If even a small fraction of the people holding those paper contracts decided to cash them in and demand real physical silver, COMEX would run out almost instantly. It would be like a bank run, but for metal. And here's the thing most people never realize. This was always the hidden pressure point, the crack in the wall that nobody wanted to talk about. Until now, because right now that crack is getting bigger. Let me tell you about something called the registered silver inventory at COMEX. This is the amount of silver that's actually sitting in COMEX vaults and is available to be delivered to someone who asks for it. Think of it as the actual concert seats, not the tickets. And what's been happening over the last several months is that this number has been falling, dropping, draining. People and institutions have been quietly walking up to the window and saying, I want my actual silver, not the paper. Give me the real thing. And COMEX has been handing it over, which sounds fine at first, until you realize how fast those vaults are emptying. Here's where it gets serious. The ratio of paper-silver contracts to actual physical silver that can be delivered has hit levels that are genuinely alarming. We're talking about a situation where tens of millions of ounces are being promised on paper, but the physical silver available to back those promises is shrinking week by week. It's like a restaurant that has 400 people with reservations, but only enough food to serve 20 of them. Most people will show up expecting dinner and find an empty kitchen. And this is where most people fail without even realizing it. They assume that because the price of silver looks stable on their phone screen, everything is fine. But the price you see is not the full picture. The price is being set by the paper market, not by the physical market. And those two things are beginning to pull apart from each other in a very dramatic way. Now let me bring this to real life. Imagine a young woman named Sarah. She's 28, works as a nurse, and she's been trying to build some savings outside of her normal bank account. She heard about silver, she bought some shares in a silver ETF, an exchange-traded fund, thinking she owned silver. But here's the catch with most silver ETFs that almost nobody talks about. When you buy shares in many of these funds, you don't actually own physical silver. You own a financial product that is supposed to track the price of silver. If the fund runs into trouble, if the paper market cracks, Sarah's investment could be hit hard even if real silver is skyrocketing in value. She could be sitting there watching silver hit record highs on the news while her own portfolio is bleeding. That's not a horror story. That's happened before, and it could happen again. But what happened next in the COMEX situation changed everything. In recent months, we've seen something that is genuinely rare. Major financial institutions, the big ones, the ones you've heard of, have started requesting physical delivery of silver from COMEX instead of just rolling over their paper contracts. That's unusual. When the big players stop trusting the paper game and start asking for the real thing, it's like watching the smartest people at a party quietly slipping toward the exit before anyone else notices the building is on fire. And there's more. The spread, the difference in price, between physical silver you can hold in your hand and the paper price listed on exchanges has been widening. Normally, these two prices are very close together. When they start to separate, when physical silver starts trading at a significant premium above the paper price, that is the market screaming at you that something is wrong. It means the people who are actually buying and selling real metal know something the paper traders don't. Or more accurately, they see what's coming and they're preparing. Here is the bigger picture nobody wants to say out loud. The global silver supply is tightening. And I don't just mean COMEX vaults. I mean the actual mining and production of new silver. Silver is not just a financial metal. It's an industrial one. It goes into solar panels, electric vehicles, smartphones, medical equipment, semiconductors. The demand for silver from industry has been rising every single year. In fact, for the past several years, the world has been consuming more silver than it's been producing. That gap, where demand is greater than supply, is being filled by drawing down existing stockpiles. Stockpiles that are now getting thin. So you have a situation where industrial demand is increasing, investor demand is increasing, mining production is not keeping up, COMEX vaults are draining, and the ratio of paper promises to real silver is dangerously high. None of these things alone would be enough to cause a crisis. But all of them happening at the same time? That's a perfect storm building quietly in the background while most people are scrolling through social media or worrying about their next paycheck. Most people never realize this part. The silver market is one of the smallest major commodity markets in the world. We're talking about a market that, compared to gold, compared to oil, compared to the stock market, is tiny. And that's actually important because it means it doesn't take that much money, or that many people demanding physical silver, to completely overwhelm the system. A relative handful of large investors all deciding to take physical delivery at the same time could create a shock that echoes through the global financial system. Think of it this way. Imagine a small town that has one gas station. On a normal day, it works fine. Everyone gets their fuel and goes home. But now imagine a rumor spreads that the gas station is running low on fuel. Suddenly, people who normally fill up twice a week start showing up every day. And people who never thought about it before start showing up just in case. Within 24 hours, the station is empty, not because they actually ran out before the rumor, but because the fear of running out caused a rush that made running out inevitable. That's what happens in a commodities squeeze, and that's what many experts are now warning is a real possibility in silver. Let's talk about who is actually paying attention to this. You might assume it's just some fringe group of gold bugs and doomers on internet forums, but it's not. Hedge funds have been quietly increasing their physical silver positions. Sovereign wealth funds, the investment arms of entire national governments, have been accumulating. Even some central banks, which traditionally focused on gold, have started paying more attention to silver. When governments are quietly building silver positions, that should tell you something. And then there's the retail side, ordinary people. People just like the nurse Sarah we talked about earlier, or a college student trying to protect their first bit of savings, or a factory worker who just got a small inheritance and doesn't know what to do with it. These people have been buying physical silver coins and bars at levels not seen in years. The demand from regular people for actual, holdable, real silver has been absolutely surging. But here is the uncomfortable truth that most financial content will never tell you. Buying silver, or any asset, without understanding what you actually own, how it's structured, and what the risks are, is not protecting yourself. It's just moving your ignorance from one place to another. The person who buys a silver ETF, thinking they own silver and doesn't realize the difference between paper and physical, is just as vulnerable as the person who keeps all their money under a mattress. Understanding is what protects you, not just owning the asset. Let me explain this with a simple breakdown so it's crystal clear. When you buy a physical silver coin or bar from a reputable dealer, you own that silver outright. No counterparty risk, meaning no other company or institution has to do anything right for your investment to hold its value. The metal is yours. If the financial system goes through turmoil, your coin doesn't care. It's still silver. But when you buy a silver ETF, you own a share in a fund. That fund is supposed to hold silver on your behalf, but you need to read the fine print. Some ETFs are backed by physical silver stored in vaults, and those are generally considered safer, though you still need to verify the details. Other products are backed by derivatives, by futures contracts, by other financial instruments layered on top of the metal. And those layers? Each one adds risk. Each one adds a point of potential failure. And this is where everything changes for most people who are watching this. When COMEX sends a warning signal, when the vaults drain, When big institutions demand physical delivery, when the spread between paper and physical widens, what it's really doing is revealing the fragility that was always hiding inside the system. It's like an earthquake that cracks the ground, and suddenly you can see all the underground tunnels that you had no idea were there. The structure was always hollow in places. The shaking just made it visible. Now let's talk about what this means for you, because I know what some of you are thinking. You're thinking, okay, this is interesting, but I'm just a regular person. I'm not some big investor. What does any of this actually have to do with my life? And that's a fair question. So let me answer it directly. If you are someone who earns a salary and is trying to save money, this matters. Because the same inflationary pressures that are draining COMEX silver vaults are the same pressures that erode the purchasing power of your savings. Every year that inflation runs at 4, 5, 6%, the money sitting in your bank account quietly loses value. It doesn't feel like you're losing money. The number in your account doesn't go down. But what that number can buy, that shrinks, slowly, silently. That is the real theft that happens to working people, and most of them never even notice until it's too late. Silver and precious metals in general have historically been one of the ways ordinary people have protected themselves against exactly this kind of quiet erosion. Not to get rich quickly, not to strike it big like a crypto gambler, but to preserve, to make sure that the value you worked hard to earn doesn't just quietly evaporate while you're busy living your life. But, and this is critical, how you hold silver matters enormously right now, given what's happening at COMEX. If your silver exposure is through paper products, through ETFs or futures contracts, you need to understand the risks clearly and make an informed decision about whether that exposure gives you the protection you think it does. Because if there's a squeeze, if the paper market cracks under the pressure of physical demand, paper silver prices could behave very differently from physical silver prices during the chaos. The people who will be hurt the most in any COMEX disruption are the people who thought they were protected but weren't. The ones who had paper when they needed the real thing. The ones who found out too late that their financial safety net had a hole in it, and nobody talks about this part. When financial crises happen, they don't send you a calendar invite. They don't give you a 30-day warning. They don't wait for you to get ready. They arrive fast, they create confusion, and the people who had prepared, even imperfectly, come out the other side in a far stronger position than the people who were caught off guard. This is not fear-mongering. This is financial literacy. There's a difference. Fear-mongering says, the world is ending, panic now. Financial literacy says, here are the real dynamics at play, here are the risks, here are the decisions you need to make thoughtfully and with clear eyes. One leaves you paralyzed, the other leaves you empowered. So what should you actually do? Let me be straightforward with you here, because this is the part where a lot of financial channels go vague and just tell you to do your own research, without giving you anything concrete to work with. First, understand what you actually own. If you have any silver investment, pull out the documentation. Read it. Understand whether it is physically backed, and if so, where that physical silver is stored and under what conditions you can access it. Knowledge is step one. Second, consider the difference between paper silver exposure and physical silver in your own hands. There's a place for both in different situations, but right now, given what COMEX is showing us, having at least some allocation to physical silver that you actually possess is something many financial experts are recommending. Not all of your savings. Not in a panicked way, but thoughtfully as part of a real diversification strategy. Third, watch the indicators. The COMEX registered inventory number is publicly available. The paper to physical ratio is trackable. The spread between spot price and physical dealer prices is something you can monitor. These are not secret, hidden numbers. They are right there in the open for anyone who knows where to look. And watching them gives you an early warning system that most ordinary people simply don't have access to. Not because it's locked away, but because they don't know it exists. Fourth, be skeptical of any single investment idea, including this one. The point of understanding silver and COMEX dynamics is not to convince you to put everything you have into silver. Diversification, spreading your risk across different types of assets, is still the most reliable principle in personal finance. Silver can be part of a smart strategy. It should rarely be the whole strategy, but what happened when the last COMEX squeeze became clearly visible should serve as a permanent reminder of something important. Back in early 2021, a group of retail investors, ordinary people on Reddit, people with day jobs and student loans and grocery bills, decided to try something. They organized a campaign to buy physical silver and silver-related assets all at the same time. They called it the Silver Squeeze. And for a short, stunning moment, it worked. Physical silver sold out at dealers across the country. Premiums, the amount above spot price that you'd have to pay for real silver, shot up dramatically. The paper price barely moved because the paper market is enormous and controlled by massive institutions. But the physical market showed its cards. Demand could outstrip supply very, very quickly. That event was a preview, a tremor before the earthquake. And what COMEX is showing us right now suggests the structural pressures that made that moment possible haven't gone away. If anything, they've been building. Here's the reality shock moment I want you to sit with. The average person goes through their entire financial life making decisions based on incomplete information. They save in a currency that loses value. They invest in products they don't fully understand. They trust systems that have cracks in them. And none of this is their fault, because nobody ever sat them down and explained how these systems really work. They were taught to work hard, earn money, and deposit it in the bank. They were never taught to question whether the bank or the ETF or the paper contract was actually as solid as it appeared. What's happening at COMEX right now is an invitation, not to panic, not to run out and make wild decisions, but to wake up, to look at the financial world with clearer eyes than you had yesterday, to ask better questions about what you own, how it's protected, and whether your current financial strategy accounts for the risks that are quietly building in the background. Because here's the truth about every major financial shock in history. Whether it was the 2008 housing crisis or the dot-com crash or the inflation surge of the 1970s, there were always warning signs before the breaking point. There were always people who saw them and prepared, and people who dismissed them and paid the price. The warning signs were never secret. They were just ignored by the majority because paying attention to them required effort and the willingness to feel uncomfortable for a moment. You've already shown you're willing to do that. You're still watching this. That puts you ahead of most people before you've even made a single decision. Let me bring this full circle. We started with COMEX, a name most people have never heard, and I've tried to show you that it's not just some distant financial institution that has nothing to do with your life. The dynamics playing out there right now are connected to the purchasing power of your savings, the safety of your investments, and the broader story of how real wealth is being quietly transferred away from people who don't understand the system and toward people who do. Silver is not just a shiny metal. It's not just jewelry and coins. It's an industrial material that the green energy revolution cannot function without. It's a monetary metal with thousands of years of history as a store of value. And right now, it's sitting at the center of attention between a paper market that has made promises it may not be able to keep, and a physical market that is demanding accountability. The COMEX warning that has been triggered is not a guarantee of a crash. Markets are complicated and humans are unpredictable. But it is a clear, verifiable signal that something significant is happening beneath the surface of the financial system. And the people who take the time to understand it, to think about what it means for their own financial situation, and to make thoughtful adjustments, those people will be in a very different position from the ones who ignored it. You don't have to be a millionaire to protect yourself. You don't have to be a financial genius. You just have to be willing to pay attention, ask questions, and make informed decisions. That's it. That's the entire difference between financial security and financial vulnerability for most ordinary people. Think about the salary worker who spends 30 years building savings only to see inflation quietly eat away at a third of its value. Think about the young family who put money into a silver ETF, thinking they were covered, without realizing the product they bought had more paper than substance. Think about the student who dismisses all of this as too complicated and doesn't engage with financial education until a crisis forces them to, when the options are much more limited. You don't want to be any of those people. And you don't have to be. Because you're here. Because you're asking questions. Because you care enough about your financial future to sit through an 18-minute video on something most people dismiss before they even understand it. The decision you make from this point forward, whether to dig deeper, whether to look at your own silver or metal exposure with clearer eyes, whether to share this information with people you care about who might not know, that decision belongs to you, and it matters. Not just for your own wealth, but for the people around you who count on you to be thinking clearly about money. COMEX has sent its warning. The vaults are draining, the paper-to-physical ratio is stretched. The big players are quietly taking delivery. The retail demand for real silver is surging. The industrial demand is climbing. And the world is watching to see whether the paper market can hold or whether the weight of all those promises finally becomes too much to bear. What you do with that information is up to you. But at least now you know. And that knowledge is worth more than any silver coin, because it applies to every financial decision you'll ever make from this moment forward. If you learned something new today, make sure to subscribe to Money Insights and like this video. More powerful financial truths are coming next.